Welcome, everybody, to another episode of the From Adversity to Abundance podcast. I am your host, Jamie Bateman, and I'm thrilled today to have with us Tim Calise. Tim is an investor, consultant, business genius, and among many other things, a father, etc. And we're going to get into a lot of the relationship type stuff. But Tim, how are you doing today?
I'm doing great, Jamie. Thank you for having me on the show. I'm really looking forward to it.
Absolutely. I know I'm really excited. You were flexible enough to reschedule, and I appreciate that. Um, so who are you? We touched on it briefly. What are you up to today professionally? What's your focus today?
Yeah, professionally, I am an investor and consultant for service-based businesses. My belief is that business is built on relationships, and so I work primarily in service businesses that have or want to have a recurring revenue component. So membership, subscriptions, things like that. And it could be traditional service or things like technology, say, software, SaaS, those types of things. But I just fundamentally believe that creating a relationship with a customer or a client, solving problems for them today and into the future is really where I have found my expertise.
Yeah, well, I will say it didn't take me very long to find out that you run in some well-respected circles in the business world, and you've dealt with some definitely I'll say famous entrepreneurs. So can you mind naming one or two before we jump into your backstory?
Sure, probably the most well-known one right now, and I take a lot of pride in have been on the executive team at Gym Launch alongside Alex and Liv Hormozi. But in addition to that, I have a phenomenal mentor and a gentleman named Sharon Srivatsa, who I believe we both know, who's both
Absolutely.
in real estate as well as banking, investing, etc. And just kind of both being a phenomenal guy, but also kind of a sage in the advice that he's been able to give me and see around some of those corners
Yeah.
that I'm not seeing. And then I started my career in the financial services business, working on a team with a little over $2 billion under management. And so I've been fortunate enough to find my way into some great rooms and stand shoulder to shoulder with some great people.
Yeah, that's fantastic. Yeah, the Hormozis are obviously on a significant rise right now for sure, and I've really gotten into Alex's podcast in particular. He offers so much, and then Sharon is the man. He's such an awesome guy, and I've gotten to know him a little bit over the last couple of years. It's been fantastic. He just continues to give, and that's
Yeah.
just awesome, and he's super smart. But this episode is not about either of those two. This episode is about you, Tim, and your story, but really also about the listener and what we can learn from your story and what we can gather as far as lessons learned from your journey and some of the adversity that you've been through. Just to quickly set the backdrop, from adversity to abundance, we don't pretend that someone went through adversity and then overnight they reached abundance and they have no more challenge and everything's fantastic. But the fact is, I know we're going to get into some mindset stuff. The fact is, we do have a lot of influence over how our lives go and how our perception or perspective is and how things end up for us. So that the goal of the show is to inspire as well as provide tactical insight into how you've been able to grow and get to where you are, Tim, and so that we can take that and better ourselves as listeners and as entrepreneurs. So enough of me rambling. Let's jump back. Where do we want to start, Tim, in your backstory?
Yeah, I think when I heard adversity to abundance, for me it was I was very fortunate. I was raised in a phenomenal family. I had my mother and father were both home. I had two great sisters, the whole nine yards. So I don't have the kind of traditional the deck was stacked against me, that type of thing. But
Yep.
in reflection, I think the thing that my adversity was very much between my ears. It was the adversity of relationship for me, like who I was, my identity, how I could kind of navigate the context of my life through these different chapters. And so, kind of starting from today, I've chosen to build a life of intention around being a father who's home with I have three kids, all kind of 10 to 14, and helping attract people who want to have this idea of not just working more to get more, but realizing, kind of how we can build and reverse engineer a life where we get a lot out of every hour that we spend, and we get optionality into to be able to do the things that we want to do. So I would kind of
Sure.
start now and almost work backwards, and just
Yeah.
and
Well,
just to say, I think that the adversity again was just kind of the coming of age story of giving up the what I should be doing versus what
mm,
I feel is my zone of genius and what
mm.
I choose to pursue. And I think a
Well,
lot of people
let's
can resonate with that. Yeah.
absolutely no, 100%. And let's drill down as far as in your past. Excuse me. And I'll throw out the caveat here that it's very easy for us to look back and judge you or your family or any of your teachers. I'm making this up, but as far as we have the gift of hindsight at this point, right? And so the
Yeah.
goal is not to put anyone down or anything like that. But what would you say were some of the influences that maybe kind of created some adversity in a sense for you and your mindset and your relationship with yourself, as you mentioned?
Yeah, so I think from a very early age, and again, all of the things you just said are I 100% agree with. I am not
Hmm.
speaking down to anyone. I've been
Yeah.
so fortunate to be surrounded by positive influences, but I think for me, it was always this disconnection between what I saw going on around me. I grew up on the North Shore of Long Island. I was surrounded by a lot of professional folks. My dad was the put on the suit and tie, take the train to work, those types of things. Uh,
Yeah.
and being surrounded by folks that were in kind of traditional commerce, banking, lawyers, et cetera, I
Yeah.
think at least my interpretation of that was, here are these very well respected, quote unquote, successful, financial and otherwise, folks around me, and they all have this kind of common pattern. So therefore, I should probably want to be, seeking the banking job where I will be there for 40 years and ascend through the ranks. I should want to go to law school, business school, et cetera. And I've just, quite frankly, I was always kind of more emotional one, and
Mm.
it just never fit. It felt like clothes that just weren't my size. And
Hmm.
I think I followed that up until kind of my college and beginning of my professional career, when I was able to really kind of take stock and say, the proverbial fork in the road. Do I want to, you know, die living the life that or potentially fail living the life that I want, or potentially succeed living the life that somebody else wants for me? And I think the next kind of 15 or 20 years was the pursuit of kind of working through that in many, many ways. And now being a husband and father, I think it just gives you those additional opportunities of reflection.
Absolutely. So as you got out of college, it sounds like and I think a lot of us can relate, you just do what you think you're supposed to do, right?
Right.
And follow the example you've seen before, and that apparently has worked for others. And so there's
Yeah.
kind of, one track or a traditional model. So walk us through those 15 years. I know that's, we can't pack 15 years into 15 minutes, but how was that, what were some of the high points and low points of that kind of 15-year period where you were sort of figuring it out on a professional level?
Yeah, the summary I would give is there are some distinct chapters kind of through that 15 years, and each one marked by the saying, giving up the good for the great, or the potential of the great. So I graduated from college, economics, finance, things like that, degrees, and I went to work for a division of Citigroup. So I was in the kind of traditional brokerage world, and I was so fortunate to have a boss and a mentor who said, you don't want to be here. I don't think this is the right place for you. And he made a
Hmm.
connection, a very, very hard kind of like, you are no longer going to work here at the end of this year, and you're going to go and talk to this person, and
Hmm.
hopefully you guys can figure something out. And what that looked like was, from the outside, a very risky decision, which was leaving an opportunity at a big bank of consistency and the known quantity and all of those
Hmm.
types of things. As a kid from New York who moved to
Yeah.
DC for school, then ended up in Birmingham, Alabama, of all
Mm.
places, to build a hedge fund. Now, on paper, that seems like the most ludicrous idea. And if you were a betting man, you'd probably say, this seems like it's got a low probability of success. But
Sure.
it was the best thing that ever happened to me. It allowed me the space to pursue something that probably at the time I was just too naive to know any different. Like, I just went and did, because why
Hmm.
not? I had no reason to doubt myself. And it was the coming of age for me of like, I put my stake in the ground And I succeeded on the merits of, I'm going to go raise money. I'm going to go create something with a partner of size and value for others. And over 4 years, I was able to raise almost $350 million from various investors in
Wow.
my early to mid 20s, which is when I say it today seems, again, possibility versus probability. It was possible, but not probable. But I
Sure.
think that was the greatest part of the whole thing. It
Mm.
was this idea of the adversity of making a hard decision, seeing it through, betting on yourself, and then kind of walking through that process. And that ended, the end of that story was we voluntarily gave all that money back before the 2008 market crisis. So again, adversity
Wow.
being, I spent 4 years of blood, sweat, and tears and risk and all of these things in my early to mid 20s, only to effectively undo it all in a
Just to
matter of an
get
instant.
back to the start again,
And
basically.
we're right back to the start again. So these kind of,
Wow.
this theme of hard lines in these chapters was literally, I have shed that skin. It's not like I carried that forward. It was, I left the hedge fund business and went into technology and fitness because it was something I just felt passionate about at the time. And that led me, in a 10-year period, led me to being introduced to Alex and Layla over at Gym Launch, stopped being a business owner, a gym owner, and became a part of the leadership team at Gym Launch. And again, new chapter started, which was
Yeah.
an ascent in an 8-figure business. So,
Yeah.
I think the adversity is just kind of these chapters and making hardline decisions
Sure.
for hopefully pursuing something better.
Yeah, absolutely. And I also, one thing I would like to highlight is that it sounds like you didn't go from, W-2 for 15 years and then business owner for 15 years. Life can have seasons and chapters, as you said, right? And so we've had other guests on the show who've been very successful and, started businesses. And then I won't even say, I don't mean to say gone back, but just gone to a different chapter where they take a W-2 again, but it's a, fantastic path for that season of their life. Just looking back before we move on from that, at those, I guess, decision points, let's take the first one as far as no longer working at the division of Citigroup. I mean, what's going through your mind at that point, and how did you? I know you had the influence of your mentor, and you had the influence of the person he introduced you to, but really, what went into that decision-making process?
I asked myself the question, and I think this is important for anyone to do, which is like, when you're facing a decision, you play it all the way out to its natural conclusion.
Mm.
And I said, okay, I'm on this
Yeah.
path. Let's say it goes perfectly to plan.
Right. Right.
I'm now a stockbroker in a job that I don't want to have, in a business that I don't feel passionate about, and probably doing things that I would regret, the me of today making
Mm.
that choice.
Mm-hmm. That's
And I
great.
think
Yeah.
in many cases, some of this is related to, you have to kind of have another paradigm, another vision, or have somebody else, look to somebody else's example just to know what's available to you.
Yeah.
And, I think at that time I was looking at the gentleman who treated me very, very well, and we're still friends today. And he was kind of the relationship guy.
Mm.
He worked a couple of hours, but he had all the connections, he had all the network and all of
Mm-hmm.
that kind of stuff. And I was like, how do I do something? And again, as I mentioned before, I was much more kind of the emotional. I tied
Mm-hmm.
more into that piece of me than the gladiator piece of me. And I'm like, I actually really like the relationship based stuff. Like, I like
Mm.
being a
Yeah.
broker. Yes, is relational, but it's much more. I'll call it like uh, tactical. It's
Yeah.
you're doing stock trades and
It
stuff like that. I
it's
just
more
didn't think it
it's more
was
transactional, right?
transactional.
Yeah.
Exactly.
Absolutely.
And so I think I was pursuing this idea of, how can I build relationships where I've got a bigger lever, if you will.
Sure. Okay.
And that is a
Yeah.
common thread that goes all the way through. And I think I was also, looking within myself, saying, how do I match my personality to what I think, you know, is what's needed. And that's more of a blue ocean, red ocean, in my opinion. I went
Sure.
somewhere where I felt like I could be more competitive and not just, go head to head against everyone else doing the same thing.
Yeah. No, I mean, just a couple of things I want to highlight for the listeners. Again, if you make a decision, a career decision that seems monumental at the time, and it was a very important decision that you made, right? But but you've had chapters, you've had seasons. It doesn't mean you stayed in that, in that particular position for the rest of your life. And just secondly, what you just said about highlighting, kind of taking the long-term view, or almost stepping outside yourself and look and pressing fast forward and say, am I going to be happy with how this plays out if I stay where I am? And that's a really key point there. So, okay, tell me real quickly about handing back the 350 million. I mean, what went into that decision? I know that could not have been fun. I mean, I raised capital. I've never raised that much money. That's a lot of money. What went into the decision-making process before 2008?
Yeah. So all of the great moments of pride that I have through my personal and professional career have been times where my kind of moral and belief systems were both tested and, I'd like to say, adhered to. What I mean by that in this case, it was what got us from 0 to 350 million. There came a time where that was not going to carry us forward. And we had a very distinct conversation, which was the market climate, just for anyone who kind of wasn't in the equity markets in the US at that time, was, this is when mortgage defaults were starting to pick up, like The Big Short, the movie. It's kind of all around this time, right, where things were dislocated. There were weird, funky things happening in the industry. And so we saw the early parts of that. And so we said, we either change our stripes to kind of mold into what works today, because we weren't in a normal market climate, or we stick to our knitting and say, you know what, we're going to take our ball and go sit on the sidelines. And that is the conversation I had with our investors. It was October of 2007. I still have the deck. And I said, here's everything we're seeing. Here's graphs, the whole 9 yards. Here's how we've gotten to where we are today. Here's why you trust us. Here's why the reason that our strategy is not working today. And here are the decisions that we have to make. And I will leave it to you. If you trust us to navigate this, we'll give that a shot and try to articulate that. If you feel like you want your money back, you're welcome to take it. And overwhelmingly, people voted with their feet, and they said, we'll take our money and go elsewhere. And I don't fault them, because there was a lot of uncertainty, and saying, we're going to go to cash when you're in the business of investing other people's money is not a popular opinion.
No, right.
But again, it was one of those, like, I cared about the relationships that I had with these folks, and I had a moral and a fiduciary obligation. And it sounds very, in hindsight, like, oh, you are clairvoyant and did all the right. Like, that's not the. We just gave up an 8-figure revenue business effectively on the nightmare that could have been, which is, if this all comes crashing down, I don't want it on my head that we lost $300 million worth of capital because we levered and all that kind of stuff. I don't think I could sleep at night. I just knew that I could sleep at night knowing I took all the learnings and moved forward. I love Jeff Bezos has this concept of, one-way versus two-way doors. One-way doors, you can never go back through. Two-way doors, you can go both ways, right?
Sure.
I could always live another life having given up the money. If we had gone forward and gone off the cliff at 110 miles an hour, in my opinion, probably more psychologically than anything, that was a one-way door I could never go back through.
Man, that's it's just, I think that's so much harder than we're giving it credit for right now. I mean, that must have been really challenging just to present that slide deck. I mean, just to even bring up the conversation. So kudos to you for having that, transparency. That's not an easy conversation to have. So, but yeah, I mean, it does seem like, you're absolutely right. When having options is better than having no options, right? So, okay. So walk us through, I mean, how do you not look back at that 4-year period though, and say that was a complete waste of 4 years? And I mean, how do you move forward from there?
So we've talked about kind of relationships. One of the things that I have, quite frankly, because I'll put it this way, I have chosen to do things in the last 10 to 15 years of my life that I truly, it's like you take a job that you would do for free kind of thing, because you're so passionate about it. That's actually what I care about. I care about the work. In that experience, it was one of the first times I had a partnership. And I think I took from that, I didn't make a lot of money in the
Mm-hmm.
grand scheme of things. Now, kind of looking back on it, I probably should have advocated for myself more so, but I was
Mm-hmm.
young and in my young 20s,
Sure.
and seeing a six-figure check was like, oh my God, this is amazing. I'll take anything I can
Yeah.
get.
Sure.
Threats are actually, or my reflection on that time was actually
Mm-hmm.
less about that one decision and more about I squandered the opportunity. I didn't kind of strike while the iron was hot.
I see.
And I think that's actually where my head goes more than anything, because I'm kind of at peace with the decision, but I would have
Mm-hmm.
wished it wasn't, to answer your question, 4 years of waste. It certainly wasn't. But I think I probably, in hindsight, could have made it allow me to do different things thereafter, financially and otherwise. The
Mm-hmm.
biggest asset I walked away from was not only experience, but the Rolodex of people. And I
Mm.
was talking to some high school kids this morning, and I used the phrase Rolodex, and they looked at me like I have no idea what you're saying. So,
Right.
but I left with a
A,
fairly
a strong network of investors
intact
and
network. Exactly right.
yes.
Exactly right. So it was definitely not it was not a zero above and beyond the experience.
No, but I think with correct me if I'm wrong in your case. I mean, but for me, I think, given time, it's easier to see that it wasn't at all a wash, right? And so it's hard to see those inherent benefits right at the time. So, that's I think in hindsight, yeah, you can see, okay, this wasn't all terrible. This wasn't actually 4 years of wasted time. Okay, so did you then leverage that network, or what happened in your career after that?
Yeah, so I was in Birmingham, Alabama. Didn't know anyone
Yeah.
really. My wife and I were we'd just gotten married. We were going to start a family, and we're both from the Northeast. So we took the opportunity to relocate back to, my wife is from Massachusetts, which is where we are now. And I knew I didn't really want to be in the hedge fund business. I
Mm-hmm.
had a short stint at a fund in Boston, but we didn't live in the city, and logistically wasn't what we wanted to do. Um, and we met as Division I rowers in
Mm.
college. And so we were always kind of, I liked athletics. I was always into kind of
Yeah.
health and working out and things like that. And when we relocated, my wife Googled, personal training in the town that we were living in. And
Mm-hmm.
there was a banner ad at the top that said some version of, automated personal training,
Okay.
24/7. I was like, all
Huh.
right, I'm an entrepreneurial guy. I like fitness. This sounds halfway decent. Like, I'm going to go check this out.
Mm-hmm.
And I went and did a sample day or a session at one of these brick and mortar locations, and I thought it was really interesting, really novel. And so I called the CEO and said, "Are you taking investors?" And he said, "Thanks, but no thanks. We're fully funded, but we're starting a franchise. Do you have any interest in kind of being one of an early franchisees? And we're going to figure this out as we go." And so we took the opportunity to. And so I got into the fitness technology, brick and mortar business shortly after relocating. And we grew that from zero to, we had 8 locations at one point, multi 7 figures. And so it was my first foray into building a service based, brick and mortar business, a
Mm.
full operation, hiring, training, marketing. And it was trial by fire. And at the time, whether it be the best use of my kind of, I ended up being part of it for almost 10 years. Um, but it taught me a lot of lessons about how to actually build a business well, how to, put my ego aside. I was still very much trying to like be the alpha male, and didn't work
Mm-hmm.
out all that well.
Hmm.
So learned a lot of lessons through the actual kind of application of the principles.
Yeah.
And, the end of the story is of course, I was introduced to Alex and Layla, which became a very transformative part of my life.
Sure. And then there's definitely still the relationship piece. I mean, through that whole the relationship thread through all of that. But drill down on a couple of the lessons that you did learn during those 10 years. I mean, look, building a business is not easy. Becoming an entrepreneur, it's a sexy term these days. Everybody wants to be an entrepreneur, and and I love it. I mean, I think entrepreneurship is fantastic. There should be, more entrepreneurs out there.
Yeah.
I don't know that it's for everyone though. And,
No.
it's not, it takes a special someone, I guess, to truly, have a startup and make it successful, or not successful. But talk to us about some of what you did learn as far as just building a business. What were some of the lessons that you took away?
Yeah, one of the most important ones I'll kind of highlight two. The first is, especially in the fitness industry, depending on what you read, there's somewhere between 50 and 70,000 gyms in the United States. So talk about a red
Mm,
ocean of competition. It's like,
sure.
how the heck do you differentiate yourself in such a crowded marketplace?
Yeah.
And we were able to do it through product.
Okay.
And it is something I carry today. I actually have a program called Product to Profit. And the idea being using product to create your category of one. How do you both separate yourself and create a more dynamic acquisition and retention system using the product that is already inside of your business? Because I think with a few degrees of tweaking, and what that meant in our gym was we
Yeah.
thought we were in the gym business. We weren't
Hmm.
in the gym business. We were in the transformation business.
Mm.
And what that looks like is we used to say things like, let me tell you about the classes we have. Let me tell you about the equipment that we have.
Hmm.
The harsh reality that I wouldn't have known unless I put my own money into marketing is when
Hmm.
you hear crickets,
It's not
clearly
working.
it's not working, right? So
Yeah.
the second we change it, and went, oh my God, like, of course, it's so obvious. Nobody cares about the equipment, they care about the outcome. This is the old features versus benefits conversation. The
Mm.
second it was, we're a transformation studio. It means it's not just equipment, it's accountability coaching, it's nutrition guidance, it's, all these other things. We went from charging $69 a month and having a hard time doing it to charging on average about $275 a month, and converting twice as many prospects into clients and holding those clients twice as long as we otherwise would because we had options.
Wow.
So one decision, we didn't change the footprint, we didn't change the model, other than we basically said, we need to build the full bridge instead of this kind of half-built feature bridge. We need a full
Hmm.
picture of benefits. That was the first.
Hmm.
That was more of a product conversation. The second was just me as a person. And it was, I had a really hard time, and I think this is entrepreneurs, we have this
Hmm.
double-edged sword, which is how do you both innovate and execute in a way that you can build a team around you? And I think, the
It's
fact that
tough.
you're just finally like, everybody's
It,
been here, right?
yeah.
I had a team that
Building the airplane on the way up, right?
well, 100%. And if you can ask the people on your team, it's like the age old, like, I'm going to a conference. Your team hates when you come back from a conference because it's some version of, I've got 20 pages of notes and now we're doing this and that.
Yes. All these ideas.
That what I came to realize is I was unaware the impact that I'm going to call it schizophrenic approach
Mm.
to building the business had on the team, until one of my leads came to me and effectively fired me. She's like, why am I here? And I said, oh, it's because, you're doing a great job. You're running this location, whatever.
Hmm.
And she goes, then you need to leave me alone. If you trust
Wow.
me enough to run this thing, you need to leave me, like, let me just do what I do best.
Mm.
Just stop changing things. And it was probably got to be, she must have been sweating when she delivered the message.
Sure. Yeah,
It was the
absolutely.
right message at the right time. And it
Wow.
hit me to the core. And really, because 2 or 3 years prior, one of the worst moments of my professional career was I was nominated and won a like 30 under 30 award in my market.
Mm.
And I came to
That-
find out that one of my GMs nominated me and supported me to win the award. And I didn't even thank her and I didn't invite her to the event.
I was waiting for the worst part of it. Gotcha.
We're talking 15 years later almost.
Is when you found out, or
No, like as I sit today, this was almost 15 years,
oh, got it,
12
got it,
years
got it.
ago.
Understood.
I still look back on it as like, what type of person were you
Mm.
at that time to be that tone deaf in a
Right.
business? And if I hadn't done it, and if I hadn't like literally had the scars, I don't think I ever would have come to those conclusions. And I
Mm.
and I really mean that, like putting your own money into something and
Hmm.
building a team and learning those lessons. I could have never designed that as a course, but it was like
Sure.
that experience gave me the lessons, and you're going to get the lesson until you learn it. And this is one of those times where like it chokes me up even today, because like
Yeah.
it just, like, as a person, it just wasn't who I was, and it took
Right.
over part of my psychology, and it
Mm.
was the right reset at the right time, which allowed me to then be successful thereafter.
Well, now our listeners can learn from that. And I know that I'm sure that affects how you do your coaching, consulting these days as
100%,
well. But
100%.
I think, not to beat a dead horse, but with those two lessons that you just listed there, you just identified and walked us through it's still relationships. So you said you called it a product lesson, but I mean, I shouldn't say but, and I would say it's even really, it's a people thing. So I get your point, but it really, instead of focusing on the gyms and what you offer, you're really more switching your focus to the client, right? And
Yeah.
how
Yep.
they're going to be transformed, as you said, a transformation. It's all about transformation, but again, that's relationship, that's people focus, right? It's not the equipment, it's not whatever your pricing is or whatever else. It's the people that you're serving. And then secondly, again, people that you're serving, your team. I mean, thankfully you had a good enough relationship with your manager, general manager,
Yeah.
that she felt comfortable doing that.
Yeah.
Clearly you built that trust level for her to be able to do that. But so I think those are still, they're key lessons, both being human and relationship based. So that's fantastic. So, and then from there, I know we're starting to run out of time, and I do have some questions I'm going to fire off, but drill down a little more on the Hormozi kind of relationship and how that, what did that time period look like for you?
Yeah, so it began with a call to him as I was part of this kind of fitness franchise. I ended up buying the franchise in
Mm,
2018. I bought out the prior owners, and I effectively said, we need a better business model. And Gym Launch had kind of just started to take traction, started to get some traction at this point.
mm-hmm,
And somebody else in our system had implemented some of the Gym Launch kind of principles.
mm,
And so I said, okay, we need a better business model. It's working over here. Do I feel good about taking those principles and telling everybody else what to do as if I came up with it myself?
mm,
And I sent a blind email to Alex and I said, hey, you don't know me. I own this fitness business. Somebody else has followed your guidance and has done decently well with it. I
mm-hmm.
now basically own this franchise, this license, and I'm going to tell everybody what to do. And I'm going to basically rip you off. So instead of doing that, can we do a JV? That was the whole email
So
in a
you
succinct
blackmailed
way.
Alex Hormozi. Basically, you blackmailed him.
I kindly said, "Can you help me do the
I'm
right
kidding.
thing here?"
I'm kidding.
And we jumped on the phone and we
That's
built a
awesome.
model, the Gym Launch model for our gyms. And then so we got to know each other. And then 6 months later, Gym Launch launched its own supplement brand called Prestige Labs, and they had like a little sales competition at the launch, and the top 10 people got a trip to meet down to Austin to meet Alex and Layla, and we were in the top 10, so I flew down. And imagine, if you will, a dining table literally in their living room, 10 gym owners, including myself, and Alex and Layla doing like a ad hoc strategy session. So,
Hmm,
do you need help with marketing? Do you need help with product? Like, what's going on? Like, let's help
so
solve your
cool.
biggest problem. And I was one of the last people to go. And after about 5 minutes, it got down to like, you don't really need to be a gym, like you shouldn't be a gym owner. And he used the phrase, "You're in the wrong opportunity vehicle." He goes, "You should sell your
Wow.
gyms." I'm like, okay, you're probably right, because like I was exhausted. It just wasn't, and I was running this franchise, this
Yeah.
license, and he was like, "You're just too. You're Don't take this wrong way." He's like, "You're just too smart for doing what you're doing. Like
Mm,
you belong to not be working at a gym." So I basically peeled off our gyms. And a couple months later, he called me on a whim asking for advice on something. I gave him some advice, not knowing whether it was good or bad or indifferent. And then he called back and said, "Hey, we were looking to hire somebody in our executive team. I love kind of the conversations we've had. Would you be interested in coming on board?" And
hmm.
so I joined like 2 months later, and the literal and proverbial hit the ground running, because Gym Launch at that point was on its rocket ship trajectory from zero to over 30 million a year in revenue.
It's incredible. Yeah, I mean,
Yeah,
I highly recommend the listener go, if you don't know who Alex Hormozi is or have not heard him tell his story,
yeah,
it's amazing.
yeah,
Um, both from the gym launch part of it as well as acquisition.com, which I know is more their focus nowadays.
yeah.
But that's yeah, I mean, it's so hard. Like, it sounds like you were running around, running ragged, running the gyms, and um, it's so hard to see it, from the outside. And then you have somebody who's kind of, it's so important to get that perspective, whether they're like in a mentor position or not. That can be so valuable to have that relationship. But and then so what was the not the end of Gym Launch, but how did the kind of Gym Launch go into acquisition.com? What did that look like from your perspective?
Yeah, so I was there through kind of towards the end of Gym Launch, and as for anyone who's not familiar, acquisition.com is effectively a portfolio of companies that Alex and Layla acquire and consult for and help grow. Their sweet spot is $10 million companies, plus or minus 10 million plus, to get to 100 million, 250 million. And the main levers they use are, Layla's an operator unlike any other one that I've met. So call it people systems. She is phenomenal. She's probably the best in the industry at it. Alex is just a brain, just an unbelievable market, sales, product positioning, things like that. So the right opportunity vehicle is the larger stuff. As I've said a couple of times, I have a soft spot probably for the kind of closely held, smaller, entrepreneur who's trying to kind of get on a solid footing. The 500,000 to 2 million a year in revenue kind of service business is where my sweet spot is. So the kind of split was, I was a father of 3. I wanted to get some balance back, is what it allowed me to do, and get back to kind of helping. My ideal would be to help a 500,000 or $1 million revenue business get to 10, and then I already know where to send them. Like that would be the ideal case for me.
Yeah, absolutely.
And that's kind of
got it.
That's how the hand in glove would effectively happen. Yeah.
Well, and everybody's priorities are different, and everyone's circumstances. I don't think they have kids, and I don't hear Alex. I don't hear him talk much about work-life balance.
Nope.
So but it's amazing.
We're both individually. He has this point of view. He works all the time, which I fully appreciate and witnessed. I think I'm in my now early 40s with 3 kids. I've just always believed, as I kind of getting back to my earlier stories, like I just want to be present. And so, it's afforded me kind of the last 18 months or so since awesome. Gym Launch was sold, to be able to kind of be the person I want to be in relationship to my family.
So you've touched on it already, but what is talk a little more tactically as far as what you offer currently for, who's your ideal client? You already mentioned it somewhat, but and what services do you provide?
Yeah, so I am a true kind of consultant. I do coaching as well. A lot of people use those interchangeably.
But what's the difference actually? Let's drill down on that. What is the difference?
Yeah, so coaching is kind of defined as, helping you with belief systems and things like that, kind of like asking you the questions so you can come to the answers on your own. Consulting, in my opinion, is more of an execution implementation role. So I can both come up with the idea and the plan and help you execute it. I am an action taker, so call it a high level, executor. And the reason why I do both, but primarily anchor in consulting, is because my model is I work one-on-one. I have a one-on-one program. I have a group program. The one-on-one program is all performance driven. So going forward, it's basically, if I deliver value for the company, I will get paid out of increased revenue and increased enterprise value. Traditional consultants are pay me X dollars. And the issue that I have with that is it's not tied to outcome.
I see.
So I'm basically aligning myself with ownership and saying, if my presence helps build the business bigger, then great. And if it doesn't, then it doesn't. And I don't get paid for my time. I also have a group program, which is, I call it the co-creator community. And it is based on my belief that entrepreneurs in general can be really isolated characters. We're in our own lane. We're kind of in our own heads a lot of times. And so I have a group coaching program around the idea of kind of co-creation, co-collaboration. Gets the best out of most of us. So it's support and ideation all at the same time.
I think that, the need for community is only going to continue to grow. And it can be, it's not a sob story for you or me or any other entrepreneur, but it can be very lonely, even if you're busy, right? Even if you're constantly running around, it is pretty isolating, can be. So that's awesome, that community element that you offer. So you said service-based business, like what's like paint the picture of your ideal client in more detail.
Yeah, so service-based meaning I don't really get involved with like manufacturing or things like that. Anything that is kind of true service, B2B or B2C,
Mm-hmm.
is my core. 500K to about 2 to 3 million in
Mm-hmm.
revenue. So
Mm-hmm.
kind of, and the reason why that's relevant is because I like to work with people who've had a couple of iterations of the business, like finding
Mm-hmm.
product market fit is kind of already in progress, not just
Yeah.
here's a piece of paper, we hope we
Here's
have
an
an
idea.
audience and it works.
Yeah.
I think I can be more impactful once we have some data to go off of.
Mm-hmm.
But what I have found, and I think it's remarkable to see, there's that, in our shared contact of Sharon, he says,
Mm-hmm.
transformations don't happen in
That's
isolation,
right. That's right.
and is a famous quote of his. And like, you can't read the label from inside the bottle.
Yeah.
And so it is simply the idea of there are so many businesses. I'm a big car guy. I'm a huge Formula One fan. To use
Mm-hmm.
a car racing analogy, it's like everybody's focused on, how many cylinders we're firing on and how big the engine is.
Mm-hmm.
The reality, the only thing that matters is how much power goes to the wheels.
Mm.
So I act like a better transmission. You
Mm.
keep doing what you're doing. It's not doing more, it's actually doing less. We just
Mm.
translate that through kind of tweaking things, moving things a couple of degrees
Mm-hmm.
so that we make more progress per unit of measure, energy
Mm.
that goes in. And
Mm-hmm.
that is how I personally believe is the right way to build a business like that.
Mm-hmm. It's fantastic. Really good. Awesome. Are you ready for some rapid fire questions, Tim?
Absolutely. Shoot.
All right. Tim Calise, what is one thing that people misunderstand about you?
Most people see me as like a diehard capitalist, meaning like I only care about money. And I actually believe that money is the byproduct of being really valuable in a very specific way to a specific audience.
It's really good. I'll just leave that there. Um, what's one of your biggest failures or regrets, something that we haven't talked about that you'd love to have a do-over with?
I wish in my early 20s I had hired a therapist.
Mm. Okay.
And I mean that because the idea of, I think I grew up and I still, was very much in the paradigm of like, you have to be the smartest person, and the smartest person who can withstand the most torture wins.
Mm.
And I am now of the belief that if I had a better handle on my thought process and my thinking, emotional intelligence, all of those things from an earlier age, I think I probably would have made certain choices in different ways, or at least treated different situations in a way that probably would have been more optimal.
Got it. If you could have coffee with any historical figure, whom would you choose?
That's a great question.
Hmm.
Uh,
They could still be alive today.
no, I'm historical figure. That's a really good question. I'm trying to think
We can
who that
revisit.
would be. Yeah, no, my first inclination goes to like a business, titan of some kind.
Yeah.
But I have to say, like I feel like now information is so readily available, it's probably lesser. So
Mm.
it'd probably be, a thought leader of some kind, probably a
Mm.
philosopher or something along
Yeah,
those
that's
lines.
good.
Yeah, yeah.
If you were given $10 million tomorrow, Tim, what would you do with it? Not for a business. I mean, you could use it for your business if you wanted, but no strings attached.
Uh, I would take it and hire mentors that are a couple of steps ahead of me, and then build a content team to help me build the most amazing, differentiated, authentically built brand in the market.
Love that. What is one challenge that maybe really, you may have just answered it, but what is one challenge that you're facing in your business right now?
Uh, I've always struggled with uh, controlling my impulse to kind of try new things. So I'm actually right now like trying to really be diligent about my thought process and
Mm-hmm.
what I want to do and how I want to do it. Yeah.
Yeah, that's awesome. Yeah, I know Sharon constantly talks about we must do fewer things.
That is my challenge right now, is to whittle down and find the Pareto's law version of where I am right now. What's the 80%? That's the 20% delivering the 80%.
I can totally relate to that. Way too many things that I've created that take my attention. In your opinion, what's one of the most important personality traits that someone in entrepreneurship needs?
Growth mindset and grit. If I can ask, if I can
absolutely.
use two,
those are two.
It would be,
it's a great combo.
Yeah. Believing the future is better than the present, and making sure that you've got the personality type to see it through.
That's great. What is a book or two that you could recommend, Tim?
Right now, my favorite book is Buy Back Your Time by Dan Martell. It's a must read. And then another one that has been hugely influential for me is Ready, Fire, Aim by Masterson, especially for entrepreneurs. It is a great book to, like, how to think about building a business, and this idea of it's not just bigger team, more. It's actually about efficiency and how you can win in certain arenas.
Love it. I just bought a book called Indistractable. Can't wait to dive into it. It is in the same vein as being, well, he actually pushes it back against the term focus, but eliminating distractions and gaining traction that way. So I'm excited to read that one. What's one question that I have not asked that you wish I had?
Oh, good question. I mean, I think mentorship is super important, and it's just the one thing that I think, regardless of, like, as I think about any adversity that I've had, one of the values that I hold, either with clients or even with mentors of my own, is I think a lot of people misunderstand what the value is of having a mentor. I think a lot of it's focused on knowledge and tactics and insights and stuff like that. I think for me, the thing that I highlight most is a great mentor can lend their confidence in you when your confidence is low.
That's really good. I love that.
And I think that is underappreciated, because it's actually not about whether you're right or wrong. You need to change things. Like, sometimes it's just your tank of, like, confidence can run low. And, like, on more than one occasion, it's like, you just have to keep going. I actually believe you're on the right track. And sometimes that figurative certainty is actually what manifests the real success.
That's really good. I actually just hired a business coach myself a couple months ago, and he refers to himself as the chief energy officer. He's got a lot of energy, but I can relate to what you're saying, because some of the business struggles inherently lead to, I don't know if it's it's just lack of confidence, I guess, or whether or not this thing's going to work out. And just having that support system there has been fantastic for me. So couldn't agree more. Tim, where can our listeners find you online?
Yeah, website's timcalise.com, TIMCALISE.com. And then on Instagram, LinkedIn, and Facebook. I'm on all three. And I've got a great VIP community. It's free, with nuggets that I drop, a couple times a week, based on real life examples that I'm working with clients on.
Fantastic. Well, Tim, I think it's been fantastic. I mean, we've covered a lot. I appreciate you walking us through some of your backstory, and I know for me, I pulled out a whole lot about relationships and the importance of relationships, and there were several other important threads. But I do appreciate you spending your time with us. So thanks a lot, Tim.
I appreciate you having me. Thank you so much.
Absolutely. And to the listener, thank you for spending your most valuable resource with us, and that is your time. If you would, please subscribe, share the show, and check us out on adversity2abundance.com. That's the number 2, adversity2abundance.com. Thanks, everyone. Take care.